Hey traders, Michael or Mini Frost here. You're here for another episode of Common Sense Market Analysis. Today is Hump Day, October 29th, 2025. You're looking at a daily chart of the SPY or Spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, we had Kabuki Day, Fed Day today. We cut interest rates by 25 bips or basis points. If we go over to the 5-minute chart and just take a look, had some whip around action, that's not a surprise. When it comes to that time at around 2:30, here this move was at 2:35, it's pretty much a coin toss. It's either going to send the market up or send the market down. In this case, it sent the market down. We don't trade the Fed, at least in the afternoon. We'll trade the morning session. That doesn't change. But when it comes to the afternoon on Fed Day, we don't trade that. I like to think of it as another piece of variable risk that we normally try to eliminate. As traders, we're always trying to eliminate as many pieces of variable risk as possible to give us the best probability of a winning trade, the best possibility to make money. So going back to the daily chart, we're up 0.05%, 33 cents. We'll give that a funny how that works. So it was pretty much a nothing day today, just a little whip around action. But looking at this in a technical analysis perspective, and we could zoom into this, just get a better look at this real quick. All Mrs. Market really did today was retest the vicinity of no man's land. No man's land is this number right here. It's this low. The number comes in at 682.12. The reason why we call it no man's land is because there's a lot of space in between this low right here and down towards the next destination, this gap right here down below. Okay, there's nothing in this area. There's a lot of empty space. Hence the reason why we call it the entrance to no man's land. So we never quite got to that number. Today's low comes in at 682.87, came up a little bit short. But again, just taking it at face value, we went for a test/attempt to the entrance of no man's land. And that area is generally a bull-bear battle. And we've been saying all this week that the bulls are in control. Real quick, just a little lazy swing trader intermission break. We had a bunch of profit target alerts going off in the lazy swing trader yesterday and today. We had UPS, that was a new entry alert yesterday on the 28th, and we hit the profit target in the same day. As you can see, the exit date is the 28th as well. Here was the short entry alert at 99.56, spiked it by a little, pretty much caught the high, and then ripped it right back down for a first profit target and a 3.42% gain. And we're still holding trailers. How you doing in UPS, the lazy swing trader? How about FLS, Flows Serve? We hit our final profit target today, locking in a 9.95% gain. And this gave us a little surprise. Take a look at where the entry is at 49.40, pretty much caught the dead low. And look where this thing is right now at 70 bucks. Absolute insanity. We'll give that one a how you doing, and the numbers work. But wait, there's more. What about GPC? This was a short trade where today we achieved our second profit target, locking in a nice 4.55% gain. I don't want to jinx anything, but this month, in the month of October, we're shooting 100%. What you're looking at right now is the closed lazy swing trader list. These are all of the closed out positions. As you can see, here's the start of the trades in October. You can see the enter and exit date right here in this column, and it's all green. Scrolling down a bit, in the month of August, we also shot 100%. So if you're not taking advantage of the lazy swing trader, then I don't know what you're doing. We literally hand you the trades on a silver platter. All you have to do is execute. We give you the entry, the profit targets, the stop loss so you always know your risk. We give you literally everything that you need for a high probability trade setup. We have a ton of members making money with the lazy swing trader. So earlier today, I was actually talking to one of my dad's longtime best friends that he's known for over like 20 years. We were just talking about some random stuff, talking about the market, what my dad would have been saying about this market. And what's pretty interesting is that he told me that he sold all of his positions. He's pretty much out of everything. Made a nice return on the year. He was happy with it. Says he's just going to sit back and watch what the market does the next 2 months before the end of the year. And he's just going to chill. And he told me a few reasons as to why he did this in the first place. The first one, and I think we all kind of know this, is that the market is super overvalued right now. Everything's just at new all-time highs. He sees this as a little bit of a bubble right now. But the interesting thing that he told me is that there's a lot of greed in the market right now. Greed is one of the 4 emotions that we talk about as traders. Fear, greed, pleasure, pain. The market is essentially controlled by fear and greed. And he essentially said that there's a lot of greed in this market right now. Everyone is overly bullish. And yeah, in a technical analysis perspective, there's nothing bearish about this tape. We're above all the moving averages. making new all-time highs. There's no rules or regulations that say how high she has to go. She can keep going until she doesn't want to anymore, until we get a sign and signal of a trend change. But that doesn't disregard the fact that there's a lot of greed going on. And as we know, greed is the #1 market killer. It's the #1 trader killer. Most people end up losing money or losing trades over greed. They get too greedy, they're trying to squeeze out every single penny in the piggy bank. So in a nutshell, that's pretty much why he closed out all of his positions. He made a very nice profit for this year. All of his long-term positions were up. He's not going to fall into the trap of being one of those greedy traders because of all the reasons why I stated earlier, and nothing moves in a linear line. Okay, there will be pullbacks, and there will be a correction. And when all the people who are overly greedy start to see that the tape is changing a little bit, then that's when the other emotion starts to kick in, the fear emotion. Their greed quickly switches over to fear. And it's only going to be a matter of time when that time comes. This is very longer term picture stuff. I'm not saying this is going to happen tomorrow, next week, this month. The true answer is we don't know when that's going to happen. It's until we get a good sign and signal of a trend change, which we've yet to receive. So I thought that was a little bit of a good discussion to bring up. Again, just taking this at face value, we are in a bullish tape. Okay, there's nothing wrong with this type of tape. There's nothing bearish about it. But the other side to it, and again, we have to be the umpires calling balls and strikes. A lot of these markets are overpriced right now. Just taking a look at a weekly chart real quick, we've been pretty extended from home base. And markets don't like to be too extended from home base. We haven't touched it in quite some time. Look how heavily extended we are in SMH, the Semiconductors ETF. Overly extended. And it's just a matter of time, because time is more important than price. There will be a pullback, there will be a correction, and the people who are overly greedy right now will quickly change to being very fearful. That's another reason why we always need to control and keep in check our emotions within the market. Okay, this is a psychology game. We have an entire section of market psychology within the MSF Masterclass. It's one of the most important factors within trading itself. I really wish there was more to talk about in the S&P. Pretty much flat on the day, continuing to make new all-time highs, staying above all the moving averages. I mean, there's really nothing to say except she can keep going until she doesn't want to anymore. What do we got going on inside the numbers? We had a beautiful no heat trade literally within the first 2 minutes of the trading day, right on the dot. Let's go take a look. We got the morning pivot at 688.15 and then the first overhead resistance number at 689.50. How you doing? Right at the vertical line is today's activity. The first 5-minute candle of the trading day made a low of exactly 688.15 on the freaking dot. Traded right up to the first overhead resistance number at 689.50. I mentioned yesterday and today that this is a place where the market shouldn't just waltz right through. Came up a little bit short the first time around, so that does constitute as a first time, best time situation. So we could have looked for a little spike of the number, which we did receive, but nevertheless, this was overhead resistance. Traded right back down to the pivot and pretty much played around the pivot until the Fed meeting. At 9:31, came right into the 688.15 number, right on the freaking dot, looking for a base hit to start the morning. Showtime. Literally the next minute, there's your base hit within the first 2 minutes of the trading day. And that was pretty much the show. We don't let the remaining portion go bad on us, and the next destination towards the upside was at 689.50. These are all real-time intraday updates with inside the numbers. And obviously we were talking about this trade in the live room, where we had a bunch of traders making money, not only in the spiders, but also stocks on the move. Today we had 4 stocks on the move. In the morning, 2 of them hit their entry targets. That was GNRC and HRL. Etsy hit their entry target at the last 30 minutes of the trading day, so obviously that's off the table. But let's go take a look at GNRC and HRL. How you doing? GNRC, we got entry number 1 and 2 on the board. We opened below entry number 1, spiked entry number 2 by just a tad. The low was 167.30 against 167.82. Spiked it by around 50 cents or so, and then ripped it right back up for a whopping $30. Made a high of 200. And we'll give that a funny how that works because it came right into a big fat round number at 200 and immediately found resistance. We know that those big fat round numbers are important. That was a real-time trade in the live room and inside the numbers. The numbers work. After a huge whopper like that, we gotta calm down a little bit. We had HRL, Hormel Foods Corporation, We had entry number 1 at 22.36, spiked it by a little, made a low of 22.17, and then ripped it up for a nice small base hit. Gave you almost 30 cents or so. This is exactly what you get with Inside the Numbers. You get stocks on the move, and it's absolutely been on fire recently. By the way, if you took any of these trades in the live room or Inside the Numbers, help a brother out. Leave a comment down below if you made some money today. So you get stocks on the move, you get all of this SPY commentary, you could pause the video, read the notes, and go back to the chart to double check the work. And to top it all off, we have a list of 13 different markets with support and resistance numbers. How you doing in Tesla, one of the 13 markets that we offer? Found overhead resistance at 46420. As you can see, almost nailed it the first time, came right back down, did the deal later on in the morning. By the way, right here is today's activity to the right of the vertical line. Found overhead resistance at that number, came right down to the second support number we had on the board at 456.80. This low right here is 456.78. Spiked it by 2 cents. How you doing in Tesla? That was one of those inside the number trades. How about GC? This was resistance number 1. We had some live room members who were short gold. And as you can see, that was pretty much high of day. How do you like dem apples? Little bounce in silver with support number 1. Right here, how you doing? This is just a little bit of proof to show you that the numbers do work. Okay, I know my numbers. That's everything that you get with Inside the Numbers / the live room. If you purchase the live room, you get Inside the Numbers for free. So although we were pretty much flat in the S&P today, we have some interesting puzzle piece informations in my number 1 favorite market leading indicator, CAMP IWM. We're down 0.85%, and we're already back testing these two important numbers. Okay, came up a little bit short of the 244.30 number, came up about 40 cents short, but what we did accomplish today is filling this gap right here and retesting the 20-period moving average home base. And what we did was close above home base, but we closed below that 247.18 number. So we'll see what tomorrow brings. We still have Thursday and Friday. Friday's obviously going to be an important close. That's the weekly close. The larger the time frame, the more dominant it is. So that weekly close is certainly going to be important. But as of right now, my number 1 favorite market leading indicator can't seem to get going and make new all-time highs, just like the spiders are doing right now. Another day of closing candles below the pivot number in DJT, the transportation department. Today we went right up to retest these moving averages towards the upside. We also ran a test near the vicinity of this breakdown candle high. Didn't quite get to the actual high, but it's around 20% in the vicinity of the high. That is overhead resistance. Couldn't get above it, came right back down below 3 out of the 4 moving averages, the 50, 100, and 20, and we're closing below the pivot. Next destination is going to be filling this gap right here, and then possibly another test of the last line of defense, the 200-period moving average. This is my second favorite market leading indicator, but a number 1 canary in the coal mine. Gotta see when it comes to the weekly close if we close above or below that pivot number, and the moving averages as the cherry on top. What about the Q people? Well, it's different from the spiders because we did close at a new all-time high. The close today is 63577. In the spiders, we did not close at the new all-time high. So that's some interesting information for the Q people. Pretty much the same deal. She can keep on going until she doesn't want to anymore. We're above all the moving averages, so obviously the trend is your friend. But look how extended we are already from home base. We were testing home base not too long ago. The last time we touched home base was last week, October 22nd. Since that day, it's been 1, 2, 3, 4, 5 trading days, and we're already this extended from home base. Just keep in the back of your mind that markets don't like to be too extended. Okay, we got a lot of important stuff in this area. You got the entrance to no man's land. You have this gap right here. You have another gap that coincides with the 20-period moving average, this breakdown candle high that can be utilized as support on the way back down, and this is a recent breakout area. Little bit of a full stack situation. Looks like XLF is taking a little bit of a dip today. We're down 1.70%, 90 cents, and we're having some trouble recapturing the moving averages. Just 3 days ago on Monday, we ran another test of the 50-period moving average, closed below it. The next day, ran a test of the 20-period moving average, filling this gap right here, closed below, And today, we gapped lower below the 100 period moving average, went to complete some unfinished business, that was this gap right here, and now we're below 3 out of the 4 moving averages. Last line of defense is the 200, this black line. Just clearing up some of the noise, and if we go over to a weekly chart, we can see that there's nothing wrong with the tape, despite the fact that we're below 3 out of the 4 moving averages on the daily chart. Okay, we've been toying around with the 20 period moving average being home base, in which we were extended from for some time. Last week we closed above, right now we're trading below. Anything can happen within the next 2 trading days, tomorrow and Friday. So we'll see where XLF winds up as the week comes to the end. But if there's nothing wrong with the chart, there's nothing wrong with XLF, therefore there's nothing wrong with the overall structure of the market. Last but not least, we got SMH shaking my head, the semiconductors, smash mouth. We're up $5.50 or 1.51%. There are those palindromic numbers I was talking about the other day, and the same situation applies. SMH can keep going higher until it doesn't want to anymore, until we get a sign and signal of a trend change. Today we did receive a little bit of a pseudo doji candle that is a sign signal of a trend change, but we did not have the accompanying volume that we normally like to see. Maybe this is a little something, maybe it's not. We can keep on pushing higher, or the next destination towards the downside is going to fill this gap right here at 36311. Then you got no man's land right underneath, another gap right here, another gap right here. These are a lot of gaps that are going to need to be filled sooner or later, okay? Because the market doesn't like to leave these gaps unfilled. The market likes to finish the unfinished business. Have I told you guys how much I appreciate each and every single one of you? Without you guys, these videos or MSF would not be possible. That is true and accurate information, put it on a sticky note. We're going to pull the ripcord for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. I'm 𝐼𝐴𝐴𝐿. Please don't forget to like, comment, subscribe on the video as it helps me and the channel out a lot. We'll be back ready to go in uniform for tomorrow's morning session and the video later that night. Have a great rest of your day and take care now, folks.